claims against assets, and generally accepted accounting principles. The balance sheet shows the relationship between assets and liabilities and equity. This balance sheet relationship shows that the value of all assets to a company are divided between liabilities and owners' equity. Both parties, the creditors and owners, in theory have a claim against the assets on a balance sheet. Consider if a business does very poorly, and must declare bankruptcy and liquidate, or sell all their assets. The remaining value of a bankrupt business is the money that can be made selling the assets in the marketplace. When these assets are sold, two groups have a claim on the cash that was received. The creditors, the people the business owes money to, such as the bank and suppliers. And the owners of the business that invested in the net worth of the business. In a bankruptcy, the creditors have the first claim to the cash received when the assets are sold. After the claim of the creditors are satisfied, the owners get what is left over. Here is a typical claim on assets question. The owner of a business must dispose of his business assets. He wants to know how much money he will receive at the end of the dissolving of the company. You are given the original balance sheet values before the sale at original cost. When the assets are sold, various different amounts of cash are received. You are required to calculate how much the owner will actually receive when the business is wound up. This is the owner's claim. To complete this question, you will list all of the cash amounts received, including existing bank accounts and accounts receivable. Since the creditors have first claim, they must be paid in full. The amount of cash left over is the owner's claim. Generally accepted accounting principles. Generally accepted accounting principles are a set of rules used to govern the way transactions are handled and financial statements prepared. These are generally broad rules that provide guidelines. Generally accepted accounting principles are otherwise known as GAAP rules. We will learn 3 GAAP principles today. The first is the business entity concept, which states that business assets must be kept separate from the business owner's personal assets. So for instance, if a business owner owns a pleasure boat personally, he cannot include the boat in the assets of his business. The continuing concern concept is that the business is assumed to operate using all values, until it is bankrupt or sold. This means that asset values are kept at original cost regardless of market values, and accounting procedures must be consistent as long as the business remains operating. Finally, the principle of conservatism states that all values used in accounting must be fair and reasonable. An accountant cannot change the value of an asset. For instance, if the value of an asset increases in value on the open market, the cost of the asset on the balance sheet must remain at the original cost. This is the concept of conservatism. This ends the lesson on claims on assets. Please complete the assignment on the LPSS Biz website. This lesson also draws to a close Chapter 2, the balance sheet.